Oh. Okay, there she is. Good afternoon. This is our Monday committees meeting. Roll call shows that Terry Grenier, Tom Perry, Megan Gardner are here virtually, and Jeff Wingard, Lori Osher, and myself are here in council. And we are going to start with the Community Development Committee meeting. So I'm going to turn this over to Terry.
Great. Thank you guys for all joining. I'm going to jump right into the review of the community planning RFQ results.
You okay with me taking?
Yeah, go right ahead.
Okay. So in the background, I gave council the RFQ that was submitted. You should have, I think I sent that out a few months ago as well, or a month ago. We received two applications from two firms and an internal team that Councilor Wingard was gracious enough to serve on as well. Interviewed both of the firms. After careful consideration, we really felt that one firm was putting themselves ahead of the other firm. Mostly in their process, they really provided a lot of information about a process that prioritized figuring out what we wanted, what we needed before we figured out what to do with the buildings. And we were quite taken with that process. My hope is, we would like to move ahead with Haley Ward and negotiate scope of work. The scope of work that we've seen will likely take us through October of this year. I am looking at initial efforts starting immediately, and then the bulk of the work happening, wrap-up work that we would have tangible outcomes from would probably start in August, September. I would like to go ahead and work with them to craft a reasonable scope of work and agreement. We have some money left in our professional development fund that we set aside for this. My suggestion would be that we would take the funds that are necessary for the rest of this year out of that fund and then budget for the remainder. I'm gonna have a better idea, but the reason this was on the agenda is you guys don't like me to bring things cold to council meeting, and we're going to take the lion's share of this week to get to a full scope of work and budget analysis. I'd like us to be able to move forward quicker so that we could get something signed this month and begin the work. But I know you don't like to be surprised. So I'm letting you know that we have a vendor and I'd like to work with them on a scope and a budget, but that it would show up, dollars and cents will probably get finalized at the end of this week. And then we'd be able to bring it as an order on Monday's agenda, if that's okay with you.
That makes sense to me. Does anybody else have any thoughts that would go against that? Great.
And I think it said it pretty succinctly in the RFQ, but part of what we're looking to do is to leverage available space as well. We're trying to figure out what we need and how we can most effectively and efficiently get there, right?
I think what with this particular vendor I had was that they understood that there's a community and human process before we get to the mechanics of the building. So
Great. So yes, great. Let's move forward with that. Moving on to the next item, review the new signage, the final new signage and letterhead mock-ups. I know we worked really hard on this to get to this space, so excited to see where we go with this.
So I am joining the meeting, hopefully without creating I'd like to share. So we last left. I'm gonna share my screen. So we last left with the idea that the top image with the brick on the bottom was going to be the town sign. I think the one that you see below it with the sticks is probably more indicative of what we would see in most of them. I'm not surprised, but it was really nice to see that all the work that Mitch and Bell did rendered something that the company could very easily change into the correct format. You'll notice on the end that there's some bleed through on the letterhead, from the watermark. That won't come through when the sign goes up. That is an image issue.
Doesn't look that bad.
No, I hope it's coming out just the way you would want it, but we have welcome. And then you'll notice as we transition through, I'm having a hard time making this move, but as we transition through, you'll see that as you move to directional signage, we lose the welcome. And as the sign gets smaller, we lose the bikers don't show up. So it's that sign becomes, the gateway sign becomes the kind of the overarching image that we build everything else from, but not everything will have that, every element of that sign on it. So that was that one. And I can figure, and the new logo, so this would be, okay, why is it not changing much? So let me stop my share. And let me start it again. Just about when we're done with the pandemic, I'll get better at this. So this is the new logo that would be on our letterhead and our digital branding. So we're taking pieces of it. What the people who know that created this for us, so it's created in a way that we can blow it up and shrink it without losing detail. But we took the mountain bikers off because it was just far too much detail for the use.
For the logo.
Yeah.
Yeah.
But before I go ahead and give this the okay, I want to make sure it works for counselors. To facilitate your discussion, is it better for me to leave it up or stop the screen share?
No, I think we can hear each other, so I think leave it up just so we can actually visually see it as we discuss this. Let's open up for discussion. Thoughts from individuals about this?
I think it looks great. I can't wait to see the signs up, the gateway signs up, and because the ones that are up there now are a little weather beaten, to say the least. I'm being kind. So yeah, I like it. I like how it pairs down as it gets, as it gets smaller and functional. It looks like it all matches and looks good. I'm okay with it, with all of it.
Yep. I get very sad driving into town with the big plywood Big plywood, plywood sign on Stillwater. I think these look great. Staff did a great job. You know, kind of herding the cats here with all our design input, and came out with something that I think is really, it's really tight. It's really eye-catching. I think that it encapsulates, you know, a lot about our community, and I think it looks great. I'm excited about it.
I agree. I think this is what we agreed on, and I'm really pleased to see the letterhead. I think that's a nice job on that.
Anybody else with additional thoughts about?
I don't want graphic design people to steal Mitch and Bell, but they did a tremendous job with this, and I really appreciate all their work.
Looks good.
Great. I do like how the letterhead looks more in keeping with the more current looks of you know, I can appreciate old school, but I do like current stuff too. So if there's no additional thoughts, anybody else have anything additional to say? No?
So the only additional thing I have, Terry, is Mitch is still working with the sign vendor to try to come up with a timeline and a dollar figure. We're going to get initially a per sign figure, as well as whether or not we can get a group discount for multiple signs. Based on those numbers, we'll bring back a plan. I think he's having a hard time with some supply chain issues at the moment, and we need to figure out how we're going to construct this, because if it's putting another piece on top of this to make the swoop, it's quite a bit more expensive. So we're still working our way.
Can I ask just one question though, that I was curious about? So the slide-in signs, Pat's and University of Maine, as our businesses change, or as they, will the businesses be buying those sliding signs, or will we be helping them out a little bit?
So right now, we don't have those signs, and the reason that we don't have them or a plan for them is because you all need to pass a policy on what we're gonna do with that.
All right.
I think what exists there right now is so old and there is no policy behind it, so I can't tell you.
Okay. So that's another conversation.
Are you okay for me to stop the screen share?
Yes.
Thank you.
So we're good.
Yep.
So we'll move on then to review of guidelines for issuing council proclamations and resolutions.
So this came up because we had someone who was interested in bringing a proclamation forward or a resolution forward. And when we looked at the timing, we had created this based on having one workshop a month that came after the committees met, and then the workshop happened, and then the council meeting happened. Now, committees are meeting every week, and we are very rarely doing workshops unless we have a learning opportunity or something that you need to do that with. So I didn't know if you wanted to, I mean, you can look at the whole thing, but I highlighted 3 and 4 under procedure. I know that council wants there to be considerable public notice before it uses its voice on proclamations and resolutions. And I know that it also wants to move things forward. So you might be fine with the way we do it now, but I don't know if you'd like us to tweak that to just say committee meeting and it's all committees. So could it go from a committee meeting where it's on the agenda to a council meeting with notice, or do you want another step in there?
So you're saying we could omit the workshop in many cases?
So I flagged that when I read through the background because I was thinking the same thing, like, oh, we do all committees now. So like, is there a need to have a workshop? And so at first I thought, oh, well, why can't it go from all committees directly to council? But I was then thinking about sort of like the purpose of talking about it in committee and then sending it to workshop isn't necessarily about the number of counselors present. But to me, the committee level is sort of like the entry level discussion of the proposed resolution. And does it, that's a chance for council to hear more about it, to discuss if there's an appetite for it. And then I think that actually discussing the provisions of such a proposed proclamation or resolution would be a longer, more involved conversation. And that's not to say that those things can't happen on the same day, they could, but is there benefit in hearing the overview of it, discussing and taking the temperature as to, whether council has an appetite to move forward, and perhaps ask questions of the individual who's proposing it, and then being able to sit with that for a little bit and then return to have a substantive conversation about the content if we were to have an appetite for moving it forward. That was just my thought.
So one thing that we could do with that, if council so desired, is we could say that on step 3, instead of it will refer it to the next council workshop, it could be referred to the next council workshop or committee meeting. So then you've got some time to think about it and maybe develop.
I think too, piggybacking off Megan, the environment committee meets, separately, and we do have sometimes some state resolutions that we are looking at. Our next meeting will be looking at the pine tree resolution. So we can vet that, but all of council won't have had a chance to look at it. So we can't really go from environment to environment to council. So I don't know how we would do that without a workshop or without vetting it in another committee or vetting it at the committee's meeting.
So I think one of the things that we wanted, and just because we wanted it then doesn't mean we want it now,
Right?
is I think one of the things when I was asked to draft this was kind of wanted a home place for proclamations and resolutions unless they were part of standard business. And that place was going to be community development, thinking that more people are looking at that for the outward efforts of the town. But if you did, it goes to community development, and then based on the complexity of it, it could either go to the next meeting or the meeting next month, depending on, but a future one. That gives you notifying the public, having a chance to really think about it and not just doing it because it sounds like a good idea. And I think that was kind of some of the concern you had, and whether or not it was really tied to Orono, I think was the other concern.
So I like Sophie's suggestion of just modifying it to say in number 3 that would go to the next council workshop or community development committee meeting. I think that piggybacks on Megan's observation. I think it was a good one. And also, we may not want to keep the same format of meeting all committees forever. We may go back to, we have new members joining us after the election tomorrow. And there's a possibility we may want to go back to a different format, and that would allow it to go back to a different format if the council chose to do that without modifying this again.
If that is the will of this group, would you be comfortable with me making that brief revision and popping it on the council agenda for Monday?
Yes.
I would be good with it, but I want to make sure that everybody else is saying yes to it too.
I'm good with it. And the only other thing I want to say about this is to just praise item C in the procedure. I know we've kind of talked about this concept previously, but I just want to reiterate that I think that that's just a really great addition to, to ask the person proposing a resolution or proclamation to have sort of a contextual document that describes why, what's happening, why they're presenting it, what the direct connection to Orono is, and then potential opposition. I think that's a really important part of this, and it also alleviates a lot of the burden on staff, which is really important.
Great. I think we're all in agreement here. So I am now done. I'm going to pass it off to Meg for a comprehensive plan.
Oh, right. It's me next. I forgot it was me next. I'm just sitting here along for the ride. Okay, so comprehensive plan implementation committee tonight, we're just discussing some revisions to the disorderly property ordinance. Is Kyle here or is that you, Sophie? I don't know what's happening.
He's here.
Kyle is here. Owl just hasn't picked him up yet.
Okay.
Hi, everyone.
Okay.
Oops, hold on.
Keep talking.
I'm still here.
There we
Okay, so the last time we talked about this ordinance amendment, I believe it was in November. I think the council committee was largely in favor of the way things were going with the draft and the way it was structured in its current iteration, but had a few comments left for a few different sections in the draft. So those have been updated. I'm just going to walk through some of the changes and give feedback to see if those kind of meet what we had discussed last time. So the first, I think, piece of the first comment that was really addressed from the last time we talked about this was the legislative intent. And I think last time the way that the intent was worded in the previous version was a little all over the place. It kind of went back and forth between talking about the two sections. This time we tried to update it to more clearly state the difference between Article 2 and Article 3, and more clearly define that Article 2 is really about operational fees. It's recovering fees for a specific operation aspect of police responding to some sort of event or gathering, whereas Article 3 in the disorderly property section is more about the behavior aspect of it and dissuading that disorderly behavior on a specific property. So really more clearly defining those two things. The second item that we addressed was on page 6 into 7 with section 20-56. Previously, we had used the word abatement. So we changed that here. I spoke with the police department and staff there to kind of match similar language that they would be comfortable with. And so we kind of re-added documentation, because that's still one of the aspects here of this section, is that the police department, when responding to a disorderly activity or something that may be a disorderly activity, they're documenting that that's happening, but they're also mitigating that activity through whatever means necessary. So that mitigation language was okay with our public safety staff. So we went with that in the title and in the actual paragraph language itself. Next, we moved on to the penalty section, I think was where a decent amount of the discussion was last time. And when we re-looked at this, and I went back and listened to that conversation that was had the last time, we really felt that the most consistent way to handle the penalties was previously the section 20-60 on page 11 only applied to disorderly properties that were a result of disorderly activity 2. And, which meant that the only way a disorderly activity 1, a property that had become a disorderly property as a result of multiple disorderly ones, the only way they would ever be financially penalized was if they didn't go through with their remediation agreement, and they had to go through the civil penalty process. But to make the ordinance more consistent and kind of more logical when you read through it, we just extended that 2060 penalty section to any disorderly property. So regardless of whether it's a result of 3 disorderly activity 1s or a bigger event that would constitute a disorderly activity 2, that penalty section and the subsequent penalties for future disorderly property instances would apply. And we really thought that that was still keeping in line with the intent, where you still have those 3 instances of disorderly activity 1s before any financial penalties really kick in. You still have the first one is more of a warning and just, hey, this isn't allowed by the ordinance. You need to stop kind of message. The second instance of a disorderly activity 1, results in more of an education, sit down discussion about, why the activity is really, prohibited or not allowed or constitutes a disorderly activity and a nuisance to the surrounding area. And then it's not till that third one, along with the remediation agreement, that the financial penalty kicks in. And I think part of the discussion last time too was the idea of larger apartment complexes where you could have, multiple units within a development like that, all really contributing to those disorderly activity 1s. And you could have different people or different units within those developments, becoming disorderly activity 1s. And as we talked about the last meeting, those developments generally have to go through the planning board process and talk about security response and things like that. So there really should be a plan in place to handle the overall behavior of a development like that. So those individual instances of different units within a development like that really should be already being taken into consideration. So having those individual instances contribute overall to a disorderly property that could then eventually be penalized if they had 3 of them, seemed to make sense. So that was really changing 2060 to reflect any disorderly property. The last change that was discussed at the last meeting was on page 12, and it had to do with the responsible parties language in 2060 C, specifically C4. On the document that was submitted to council ahead of time, we talked about that it was still out for legal review. We actually just got that response this afternoon. So I have a little bit of an update there. The town attorney recommended taking out that last sentence in 2060 C4. So where it says, it shall not be a violation of this article where an invited person engages in unlawful activity which could not have reasonably been foreseen by the owner, tenant, occupant, or sponsor, which requires police intervention. The town attorney recommended getting rid of that sentence and just leaving the rest of the language as is, and felt that that sort of accurately gave the town the authority to penalize the responsible party and didn't leave room for any real loopholes for anyone to just sort of work their way out of being responsible. So with that, those were the changes that we resolved the last discussion. I'm happy to answer any questions.
All right, thanks, Kyle. Do folks have any questions or comments about these revisions?
Good job, Kyle.
So,
Okay. Oh, I was gonna say, sounds like no. Also, to echo Tom, great job. I think this really ties up all the little loose ends that we discussed last time. Sophie?
so where this is this is an ordinance that we have spent a lot of time working our way through, and we've kind of zigzagged quite a bit. I would suggest that we have Kyle clean it up, get to a final draft, post that final draft out there for the world to see, call a public hearing. Although this is not land use, I would assume it will come back for discussion to give people time to comment and make the council aware of any concerns that they might have. But we would be in the final stages.
Can I just ask a quick question, and just forgive me because I just don't remember. These do residences that are attached to the college, and I don't want to just say frat houses, but
Oh, yep,
do they fall under the same? Okay,
they do.
and I'm not picking on frat houses. No, there are some out there that. That's why I didn't say it.
If that works for you, then I would probably can we call the public hearing on Monday?
Mhm.
And for April? And that way, we're looking at adopting this before everybody departs for summer fun. Or just stops paying attention for summer fun, however you wish to spend your summer fun.
All right, sounds good. Thank you, Kyle. And I will hand over the proceedings to our Finance and Operations Chair, Ms. Carey.
Thank you. And we have 3 items under finance and operations. The first item being replacement of the WPCF System Control and Data Acquisition, SCADA system. And Sophie, I guess that's you.
We like to call this the SCADA system, and I think this is Chris's first time coming from.
For those of you I have not met, I'm Chris Peru, the new superintendent of WPCF. And we're here to talk about the SCADA system. What the SCADA system does for us at the plant. Do you have the documents?
I sent it out by an email,
Yep,
so
sorry.
Well, it was just a guide.
they're sure.
Yeah.
So first and foremost, our software from Rockwell that runs the SCADA system runs on Windows 7. So that's a security issue to begin with. So we need to get rid of that. The reason we still have it, well, I guess because the software is 10 grand. And we tried in the beginning to do it with the virtual computer. We tried to build a virtual computer, and it doesn't work well. There's some issues with it that will never be resolved. So that said, the new software does not run on 7. It needs to run on at least 10. So what this is purchasing the new software and a new computer so we can run on 10. The SCADA system itself does a lot for us as far as control. We have a lot of pumps that have to stay at certain rates, and the SCADA system will follow those pumps and keep them at the rate that we've set. Case in point would be an RAS pump that pumps sludge from the bottom of one of the tanks needs to stay at 30% of flow. So I gave an example here that if we had 1 million gallons of flow, a 30% return rate on that would be 208 gallons a minute. If that flow was to rise to 1.5 million, a 30% return rate would be 312 gallons. So the pump will follow the flow. It'll always stay at 30% of what the flow is. And that's allowed to happen because of SCADA. The only other way you could do that is to manually change it. So, but we need to have it change not only every hour, but every minute. It needs, if the flow goes up, the pump needs to go up. It's that simple. And what that pump does for us is it keeps the sludge blanket down in the tank. If it gets too high, we have problems with it. It could escape the tank and be in the effluent. It could also result in the sludge being in the tank too long, which is another issue because it's without air. So once the sludge enters this tank, it needs to come back out and go back to the beginning of the system, back where there's air, or be wasted out, one or the other. It can't stay in there. So we have another pump connected to the same tank that does wasting for us. Wasting is done every hour. SCADA will start this pump automatically, could be running right now. And it will run for whatever we set it at. Right now it's set to run, I don't know, I'd have to look, but maybe 7 minutes every hour. It will take sludge out of the system because we always have stuff coming in. And that keeps us a balance, keeps our food to mass balance. The only other way you could do that would be to do your math in the lab in the morning and then say, okay, we need to waste 7,000 gallons. Where it's best to waste that 7,000 gallons over the 24-hour period. And that's another thing that SCADA does for us. It runs that pump automatically. It also controls DO. SCADA system will watch.
Dissolved oxygen,
Say again.
dissolved oxygen.
DO, dissolved oxygen. SCADA will monitor what the DO is in aeration, and we have it set so we don't want it to go below 3. So if it drops below 3, the SCADA system will tell the air pumps to increase and provide more air. If it goes above 3, it will do the same. It will slow it down. So in that respect, it's saving us power. If you didn't have that type of control, you would have to set your aeration at a certain rate, and it just stays there, whether you have enough air or not.
Can you describe the waste again? You were talking about wasting.
Wasting. The sludge in our system is always growing. It's always increasing. And we can only let it get to a certain level. So to keep it from getting too high, we take some out.
What do you do with it?
We put it in the digester at first. And then it's, as far as the system goes, it's gone. Now, the system doesn't care where it goes as long as it's not in the system anymore.
The digester isn't part of your system.
Well, it is, but it's separated.
It's not part of
It's
our
just a whole,
process.
it's basically a holding tank.
Yeah, it's not part of our process control.
Right, it's not
System.
part of the activated sludge system. Once it goes into the digester, it'll sit there until it's dewatered and hauled off. But that wasting pump will pump sludge from the system to the digester.
So when I think about WPCF, because I am not as scientific or as up on my wastewater process as Chris is, he's very patient with me and sometimes draws cartoons. But ultimately, when wastewater comes into the plant, from as soon as we accept it, all the way until it goes into the digester, we have to be very careful to maintain balances so that the bugs in the sludge stay happy. So what SCADA is able to do is 24 hours a day, 7 days a week, 365 days a year. It helps us maintain that balance. Chris looks daily and weekly and monthly, different points of data to determine how he wants to adjust things to get the best, most optimum process to keep the bugs happy and of the right age and get the most process that we can so that we're sending clean water as we can out and as little solid as we can into the digester. Is that a fair? See,
Yep.
he's teaching me.
It's a balance. It's actually, it's a food to mass balance.
The other thing that SCADA does, and I say this with the finance hat on, is our license requires 24-hour-a-day monitoring of the system. And we could do that by putting shifts and people at the plant to monitor all of the system and just run in circles. Or we can have the SCADA system that pulls all that data into one place, limits the amount of time we have to run to check, we still do. Will alarm, so on Penobscot Street, Terry will like this, when the Penobscot Street pump station clogs up and we get a high water alarm, that's SCADA that tells us that we have to go pull the pump or fix it. We don't even have to pull it anymore, we just fix it now. And clean it so that waste will continue to flow to the plant. So what we're asking for is to replace that SCADA system. And can you talk a little bit about the process that you went through to get to what we're asking for?
Yeah, we didn't do an RFP. We basically just called people that we know that can do it.
Right.
And have them come look at our system, look at our program. Just give us a price to get the new software and put it in Windows 10. You know, new computer and mod. And we got 3 prices, which were really out there. We had a price of $55,000, $22,000, and $11,000. I think I don't know about the 55,000.
Yeah, we didn't bother with that.
But I think the difference between the 22 and the 11 is one of these companies, that's all they do, is Rockwell software. So I think the labor is a lot less for them. We're gonna do it quicker.
Yeah.
Because that's literally all they do is Rockwell software.
So is that the 11,000 bid or the 22,000?
That's the 11,000.
The 11,000 bid. You had me at Windows 7.
Yeah.
It's like, okay.
Can you describe what kind of support the company's going to give us or give you?
It comes with a license. The purchase of software comes with a license, and they provide support for a year. After that, support is an expense. Our local electrician that we use has a support license with Rockwell. He's the 22,000. Would have liked to go with him. He's done a lot of work with us over the years, but he's leaving 10 grand on the table. But if we have anything wrong with our system now, he takes care of it for us. He can do that. I think the reason he's more expensive is because that's not his forte. Even though he can do it, it will take him some time. So I think there's a lot more labor with him. He didn't build this system that we have. So he kind of has to pick his way through it, you know, to see how they had put the logic together. So that takes a lot longer, as opposed to somebody that does it day in, day out. That's all this. The $11,000 bid. That's all they do is Rockwell software.
So the reason that we're here is that although Joe had been looking into this, we did not have it on this year's capital plan. We would like to move forward and purchase, go with this company with the $11,000 bid. And I don't have the company in front of me, Chris. What's the name?
IMC Systems.
Out of, do you know where that Scarborough, Maine. And my recommendation is that we would take the $11,000 out of the capital reserve for WPCF, which currently has $209,583 in it. So there are funds available for that.
The SCADA also does a lot of monitoring. It's not just control. And there is a lot of room for expansion as well. We can add things to this. If we had a new pump that we needed to control, we can add it to the system. Just have it built in. But it does a lot of monitoring for us too. It monitors all our flows, including pump stations and flows that come from campus as well.
And I'm always curious about technology and how fast it dates itself. So is this a system that's kind of been in, I mean, is this a fairly new technology?
No, it's not fairly new. And once you set up, this system was built in 08 with our upgrade.
Okay, so it's still.
Based on our needs
Right,
and with a lot of room for expansion. So you can, there's a million things you can do with this.
Okay.
in the
No, I guess
future.
my question was how soon will this date itself? And
Oh,
do you know what I mean? Like, because technology changes all the time.
technology
But it
will
arouse-
change, but I would guess you get at least 10 years
Yeah.
out of this.
Particular system.
Yeah,
The real heart of the system is PLCs.
the actual things that,
The programmable logic controllers. Yes.
The skater really brings it all together so we can see it on a screen and make changes to it. The PLC is what brings all the data to it.
oh, Tom, you're muted.
You're still muted.
There we go. So thank you, Chris, for providing all that information. It's a very sophisticated system and we need to have controls on it, and I'm certainly supportive of moving that forward. Do we have other comments from committee members?
In favor.
I'm seeing none. If we don't, then I think we're ready to move forward on it.
Before you go to the next item, Tom, since we have Chris here, I just want to recognize he's been on the job since January, well, December 29th, I think was the formal date. And he has just been doing a fabulous job. And I just want to recognize that because he's been tasked with some difficult things. And we've been working our way through them together. And he's just doing an amazing job for us.
We're in a permit year. I hit the ground
Thank you.
running.
Thank you, Sophie, for sharing that. And I'm certainly not surprised that he's doing an excellent job. We ready to move on? And we have one more item, presentation of the FY21 municipal audit and financial statements. And I know who that is.
Oh, wait, no, we've got the review of an update of the.
Oh, hazmat, I'm sorry. Yes, I'm just jumping too far ahead. The 227-page hazmat plan.
We have Chief Lowe with us. If he pops up on the screen, there he goes.
Yeah,
Hi, you all set?
we are. Go for it, Chief.
Excellent. So just a little background on what the hazard mitigation plan is. Back in 2000, the federal government looked at the Stafford Act and how natural disasters were funded. And part of that act required that municipalities start doing some planning, not only municipalities, but states and counties. So what we're looking at right now, or what's coming to you, is the hazard mitigation plan for Penobscot County. There's a state plan that covers the entire state of Maine that looks at common risks and whatnot. And then there's a county plan. And basically the county plan takes a 10,000-foot look at what communities might experience for risks within their community and tries to get them prioritized in likelihood of severity, frequency, those types of things. So every 5 years or so, the county goes through a review of the plan. They request communities to look at risks associated to that town and then submit that information to the county so that they in turn can submit the information to FEMA, who will either authorize the plan or say it needs to be edited. What we have done this year is we've sent the plan in, or Penobscot County EMA sent the plan in. FEMA has approved it, and it'll be coming back to us shortly. Part of the process for that is that the municipalities that are part of the plan have to adopt it as a guiding document, if you will. So basically what we're saying is, these are the issues that we've identified in our community, some of the bigger ones. These are the steps that we're going to be taking to mitigate them. And it also gives us some situational awareness to what the other communities are facing as well. So if we have a wildfire disaster or a storm disaster in Orono, more than likely it's going to affect the other communities around us. And we should have some awareness of what's going on. So when we request money or resources or whatever, we already have some front-loaded information, if you will. That's part of the planning process. This is a standard thing. My guess is since 2000, I don't know if how long you've been on the council, Tom. I know it's been a while, but more than likely you've signed a couple of these in the So it's nothing new. It's just saying that we've identified these things. In Orono, some of the biggest things that we identify are risks associated with windstorms, and we identify an unrealized fire risk, if you will, in that we have a lot of homes that rest in among the trees, which creates a wild and urban interface issue and can really destroy a significant part of the community. We also have a lesser risk of flooding, but it is still a risk. And those are some of the bigger things that were identified in the hazard mitigation plan this year. The plan itself acknowledges the effects of global warming. It acknowledges compressed winters and warmer summers. So that's pretty much a given. It's nothing that we need to identify individually. What we're looking at is things that shoot off from that and other issues. As we begin to really start looking at developing our own internal plan, which will be coming later on, we're looking more closely at risks within the community. We'll be looking at technological risks, such as what happens if we get taken over by a ransomware or something along those lines. Those are things that we will plan for at the local level. Again, this is really a 10,000-foot view of risk and how we intend on meeting it. So I guess that is the plan in a nutshell. You have the whole document. You can certainly read what Orono has put in there and what some of the other communities have. Feel free to go through the whole 500-page thing if you want to, but certainly there are things that are specific to us that might be nice to know. So I guess that's all I have. I'll certainly entertain questions or whatever the body might have.
Thanks, Chief. Questions for Chief Lowe? Chief, every community, once it's approved by FEMA, every community has to sign off on it. Is that correct?
If they want to receive federal money, yes, they do. That's a very good point. So any disaster response money, continued COVID money, any of those things, if we're not signed off on this, just like NIMS, which is the incident management training information, if we're not signed off, then right, we will be limited from that funding.
Good motivation to sign it. Anything else from committee members? Any questions? It is quite a document.
So, Tom, I do have a question for you and the committee, and that is, what level of discussion are you anticipating at Monday's meeting? Meaning, are you looking for this to be on the consent agenda because it's just pro forma? Are you looking for a presentation from the chief that specifically addresses what Orono's pieces are? Are you looking for a staff presentation that just gives a general overview of what the document is? I gave you 3 options. There might be 4th that you'll identify.
Comments from folks?
I would say that as long as Chief Lowe is comfortable with the way that our infrastructure is rated and designated, like for example, I was looking at dams, we don't have any high-risk dams. As long as he's satisfied with that, I would be happy having it on the consent agenda.
I would agree with that. Are we okay with consent agenda for it?
Yeah.
It's already been approved by FEMA. A lot of work went into it at the county level. Good. I think you got your answer, Sophie.
Thank you.
Yep. And now we're ready to move on to a presentation of the FY21 municipal audit financial statements.
So I have a presentation. I'm going to share my screen. As I go through this, if I'm going too fast, please feel free to slow me down. If I go too slow, I'm not not worried. If you decided to say, Sophie, we've heard enough, move on. Either one works. I'm just going to try to do the picture in picture so that we there we go. Oh, other way. There we go. So it's pretty late for us to be talking about the audit, but I think one thing that should inform that council, if you're not aware of, you should be, is that municipal firms that do municipal audits are having a really hard time finding staffing. And so we had the field audit was done in May. The interim audit was done in May. The field audit was done in September. They left the day they were supposed to with all the material they expected. They met with Councilor Perry and Councilor Gardner to talk about how the audit was going. They provided me with the material I needed to do the management discussion and analysis in January. Did the final review with town attorney and up their review process and turn this around. So you got it like 2 days or so after I received it. So as we've talked about before, state law requires that all municipalities have an independent certified public accountant review their financial statements. This is not a review of every single item that we transact. This is a review of our internal, looking at our processes. Are we following our processes? Are we doing what we say we're going to do in the internal controls manual? And are we fairly stating our financial statements? The town council has engaged Runyon, Kirstein, and Olette of South Portland to do this year's the audit we're talking about, which is for FY21. We have 1 more year left in this engagement to do FY22. So our audit, you'll hear me talk about governmental, general fund, and business type activities. Governmental activities are everything that has to do with what we would term the town, which is everything except WPCF, which is a business type activity. They have different reporting requirements. As management, I'm responsible for preparing the financial statements and presenting them. I am responsible for getting the material to the auditor, and the auditor is responsible for expressing an independent opinion. The auditor works for the town council. As Tom and I have discussed, when I don't agree with what the auditor says on occasion, the auditor works for the town council. So statement of net position is, this presents the information on all town assets, the deferred outflows of resources, liabilities, and the deferred inflows of resources, with the difference between them reported as the net position. So let's unpack that. Net position equals total asset plus deferred outflow of resources minus total liabilities plus deferred inflow of resources. An asset is a resource that the town controls at the present and can be used to provide services. So it's what we own. A deferred outflow is the consumption of net assets that's applicable in a future reporting requirement, period. A liability is a requirement to give up resources that the town can't avoid. So it's what we owe. A deferred inflow is the acquisition of assets by the town applicable to a future reporting period. So assets that we received before the revenue was available for us. Property taxes would be a good example of that. So when you think about deferred, it means that we are capturing it now, even though it's due or will be collected later. That making sense? Mm-hmm. Okay.
What's an example of a deferred outflow then?
So a deferred outflow would be something like MAPERS. Does that make sense?
Yeah.
So you like when I make bar graphs. Unfortunately, I couldn't get this one to show a lot. It looks pretty flat, but this is our governmental activity. So this would be everything except for WPCF. So in FY21, our assets and deferred outflows associated with governmental activities were almost $30 million. This is an increase of about 2.6 or $2.7 million, or 9.77%. For the same period, our liabilities and deferred inflows were 17 million, almost 17.5 million, which was an increase of about $2.9 million. Our net position for governmental activities decreased by $237,509, or minus 1.87%. And when I say increase or decrease across this entire presentation, I mean comparing FY21 to FY22. A large portion of the town's assets are reflecting our investments in capital assets, less any outstanding debt that we needed to incur to acquire those assets. It's important for you to know that 37.32% of our net position is available to meet our ongoing obligation to citizens. So when we look at that net position, we look at it in three different categories. The first is the investment in capital assets. Our investment from last year actually decreased by about $15,000, or 0.19%. Our restricted has increased by 149%, or $2.2 million. And our unrestricted has decreased by $2.4 million, or 72%. So this is where we start to see the impact of our borrowing where we refunded bonds, and we borrowed an additional $2.25 million for infrastructure investments last year. By the time we got to June 30th, we hadn't been able to spend a lot of that because of the supply chain issues and COVID. So we are carrying a very high, for us, level of restricted funds. And that's what we see here. What you will see is over the next year to 18 months, we should see the net investment in capital assets. We'll start to see more on the asset side, and then the debt will net it out. But you'll see it in that statement where it's just got the gross investment in assets. So this is excellent news, sort of, in WPCF, the net position. So we had $12,055,000 of assets. We had $6.9 million of liabilities. WPCF does not have deferred inflow or outflow because of the way we have it set up, which left us a net position of $5,025,000 for FY21, which is an increase of $371,000, or 7.99% over last year. So I'm just going to highlight for you, we'll talk about it a little bit later, but I'll highlight for you that we want to talk about the refunding, which WPCF didn't get any new money as part of the refunding, but we did have a premium. So we had to book the premium for the refunding, and most of that went here because of their level of debt. So it looks a lot better than we'll see next year. You should expect to see a drop in that. So when we look at the dollars and cents of that, you'll see that we have about 2.7 million in net investment on capital assets. So the net investment again is the cost of the capital asset minus the debt that we're carrying for that asset. And our unrestricted is about 2.3 million. So we have a total of, again, 5,025,000. So when we think about total net position, that's WPCF and the town. And in FY21, our total net position was $17,474,040. There's an increase of $134,141 or 0.77%. So the net position tells you on an accrual basis where we are. Statement of activities kind of tells you how we got there. So on the governmental side, we booked $19.3 million of revenues. This is an increase of 1.6 million or 9.1%. The increases were in intergovernmental charges for service, operating grants, taxes, and investment earnings. That totaled 1.617 million. That was offset by decreases in capital grants and miscellaneous revenues totaling $11,440. So why, you would ask? We got a huge increase in revenue sharing. And remember, with the pandemic, we chose not to budget for it all. So that is part of the reason. We booked expenses of $19,576,141. So the expenses are coming through in the lighter shade on the bar graph, the or yellow if you see color, and red or the darker shade represents the revenue. So this is an increase of $1.86 million or 10.5%. So there were increases in general government, public safety, education, county tax, and unclassified, and interest on debt. So the interest on debt alone was 1.141 million, and it has to do with the way we had to book the refunding. So we took on all of the proceeds and paid it out. The total of that was tempered by decreases in public services, public works, and capital maintenance of about 720,000. So let's dig into that a little more. So when we think about program revenues, charges for service went up about $133,142 or 21%. Operating grants went up about 272,000 over FY20, which is about 105%. That is not something that once we get beyond COVID, we should expect to maintain. Capital grants decreased decreased $5,104 or 6.9%. Our taxes went up about 2.75% or $377,000. Our intergovernmental went up. So intergovernmental is not just revenue sharing. It's all the money that we get from the state. So revenue sharing, homestead, Betty reimbursement, our pilot from the University of Maine classifies as part of our intergovernmental. That went up I've got the same number twice. So that went up a little over $1 million. Investment earnings went up about 26,000, which is great because we're losing it all now. So we'll net to zero. And miscellaneous had a slight decrease of about $6,000. The transfer that you see here is an internal transfer that we do with WPCF. That transfer covers the administrative costs of running WPCF. So all the collection of the billing and collection, the management, personnel efforts, payroll, all of that. So these are the gross expenditures. This is not net of any revenue. So we had gross expenditures in FY21 of $19,576,000, was an increase of $1,860,000 or 10.5%. So again, 1.4 million of that had to do with the refunding and interest paid on the debt. 560,000 of that was an increase in the education tax. 234,000 of that was an increase in public safety expenses. Those were all tempered, or we had decreases in capital maintenance of $395,000. Public works decreased to almost $70,000, and $54,000 in public services, which would be the library and facilities and parks.
So does the county tax include our share for Knoxville County Jail, or is that on the public?
Yeah. No, that all gets, they bill us just once. So WPCF, we had a couple of things with our operating revenue. First, we had an increase in our user fees. But the second in that operating revenue is also bond proceeds. So that we are artificially, Casey would say it's not artificial, but we all think on a cash basis, and that is not a cash basis revenue number. Operating expenses were down about $46,000 last year. So when we compare year over year, our operating profit loss in FY20, we were at $80,456, and in FY21, we were at $620,312. Again, I just want to warn folks, it doesn't change our trajectory on a cash basis of user fees not being enough to cover operations. Non-operating expense, you'll notice that that's quite a bit lower than last year. And the reason it's lower is because when we did the refunding, we didn't make the same level of payments out for debt and interest that we normally would. And the transfer out is the same every year. It's been the same every year since I got there. So this is just another way of showing you all those numbers I just did with revenues and where we grew. And expenses, just, I know some of you like pictures and some of you like numbers, so I did it both ways. So I put this slide in here because Tom always wants to talk about fund balance. So in general, last year, we, at the very beginning of the year, said we were going to use $431,000 of our general fund balance. This was undesignated and assigned. I am not talking about the money that we said we were gonna take out of the TIF program development fund, because you'll see that further down. And we also, we knew to balance our budgets, we had the $4.1 million in no proceeds. We had the transfers in, and the out is where we're talking about that TIF balance. So on a budgetary basis, when you look at revenues minus expenses and other financing uses on a budgetary basis, not the full books, we came in at $3.4 million more than what we had budgeted. So what does that mean? I'm gonna get to the right page so I can say this the way Tom would want me to say it. Here we go. So when we look at our total fund balance, that $8.7 million reflects an increase of $2,085,104, or 31.47%. The non-spendable is inventory, which can't be spent. And in our case, that is bulk gas and diesel that we have in stock at year end. That increased $1,681, or 10.8% from the previous year. Restricted are funds with restrictions that are controlled by outside sources, TIFs and grants, and a new one that you hadn't probably heard before are restricted bonds. That restricted section of or segment of our fund balance is increased $2.1 million, or 231%. The bulk of that is the $2 million that we brought. So we brought on $2,250,000 in bond proceeds. We spent couple tens of thousands of dollars of that. The rest of it is sitting in that restricted, is segregated as restricted funds. And the reason for that is that when we took those funds, we promised that they would be used for infrastructure investment. So our funders are expecting our value or our assets to go up by that $2.25 million. When we look at the rest of that, we have that makes up that $3 million. We have 7 TIF accounts. Majority of them have fairly small numbers in them at year end. The one with most would be the downtown transit oriented TIF district that had $450,000 in it. When you read your audit, I just want to highlight for you that we did not finalize the abatement for Brookfield Energy until after June 30. So that's a $200,000 decrease in that account.
Will that tax abatement happen every year? Or is that
Well, we're
a
gonna
one-time?
talk about that in, so an abatement is a one-time event, but we're gonna talk about that
Right.
during the manager's report. It's supposed to be a one-time event.
Yeah.
Okay, so miscellaneous. I always like to show this. So our tax, our assessed taxable value was $480 million in FY21. That was a decrease of 14 million, or 2.84%. A lot of that, some of that had to do with abatements that have been given, but the majority of that had to do with an expansion of the business equipment tax exemption. Our legislature likes to give exemptions and takes money off the taxable value. Our tax rate increased from FY 20 to FY 21 from 26.45 per thousand to 28.09 per thousand, or $1.64 per thousand. The tax commitment increased by a little over $800,000 between FY 20 and FY 21. And receivables at year end, so these are taxes receivable, increased $6,203 or 2.6%. We actually improved collections. Collections went from 98.15% to 98.17% or 0.02%. So we still have a very, very good collections rate. We want to always keep an eye on that number because if we begin to see a trend, we would then want to look at higher overlays or contingencies because we would not be collecting. So that $245,000 that sits there is money that when you built the budget, you expected to collect that you hadn't collected by year end. Cash on hand, this is a new slide. So on June 30, 2021, we had operating deposits that we could put our hands immediately on of $10,316,244. Those funds, we have a collateral agreement where the bank secures those funds with its resources at the Fed National Bank. We also had $1.5 million in invested funds. Most of those invested funds were invested in U.S. Treasury and U.S. agency instruments, except for $27,464, which were invested with Qualcomm Inc. Senior, which is rated at A-. So we have most definitely met the requirements of our investment policies. And that is my fast and furious presentation for you.
Sophie, I'd like to make two additions to your presentation. One is that it was a clean audit. There were no significant issues that the auditor found at all. And that's always the thing that I'm looking for. And second, they had two relatively minor recommendations on procedure and process, which one of them was an easy one and it's been taken care of. And the other one, I guess we're still working on, but they were insignificant recommendations in terms of the total audit. And I think we should be very pleased that our management has been able to bring us an audit without any significant deficiencies or problems. So having said that, questions or comments from the group?
It's hard to look at this because of June of 2021. It's almost a
Yeah.
year ago.
Yeah.
So yeah, so we're kind of backtracking a little bit. I did have one question. Where do we track or keep track of ARPA funds and that kind of funding?
Good
Yep,
question.
so the ARPA funds live on the grant fund, which would be a governmental activity, but in the back of your audit, if you go way to the back, they've got it broken out. There's the library construction account, there's the hazmat, I mean, there are several accounts. That's the grant fund. You will see two additions to that that will really should pop for you next year. One, you're gonna have three new major funds. One is the bond fund that Rob will be spending for infrastructure. One is the ARPA money, and the other one is the Clean Water State Revolving Loan Fund, Maine Municipal Bond Bank, the sewer bond, which Chris is going to be spending. And we do not anticipate that any of the three of those accounts will be spent out by year end, so. But we keep them outside of operations so that they can't get, the cash is commingled, but not the accounting for cash.
Okay.
Other questions or comments? I'm
I do
seeing
have-
none,
I do have a question. It's gonna mirror the last question.
right? I thought it would.
Which is, I know that this should not be a consent item, but I am, in the past, I have always just repeated this committee presentation. I am wondering if council would be comfortable with me really peeling it way back to just a few slides.
Yeah, I certainly would, Sophie. I think that the general public needs to hear that we've had an audit and it was a good audit and there were no problems with it. But I don't think they would be interested in all of that information. Everybody agree with that?
And if they were interested in all that information, they can watch this meeting.
That's correct. And they can actually look at the entire audit if they'd like to.
Exactly.
So we will post, the presentation gets posted online, the slides from it, not my maybe my narrative would, now that we're getting really good at that time-stamped YouTube link. But we'll post the presentation, and where there are no issues with the audit, and I have a very strong suspicion that you're not gonna ask me, anybody to go back to the auditor to change anything, I will post the draft one there as well. So if people, that way I can link to it in the material and not put pages in background. Okay. Awesome,
Great.
thank you.
You're welcome. Are we ready to move on to our town managers report?
Yes, so I have a few items in this. The first is, I don't like reporting, but I'm going to, that we received 2 abatement requests at the last minute. It is now too late to make any abatement requests. We got one from the Avenue and one from Brookfield Energy. So we have reached back out to our energy assessor because that is not part of our current arrangement with down east assessing, nor did we have Vision do it. We went to Bill Van Tynen, who is an expert for the state of Maine. I will bring back information when I have it. I know that we had a good argument when we granted a partial abatement and they didn't come back for more last year. I don't know why.
Is that the Ave or Brookfield?
Brookfield.
Okay.
I don't know why they wouldn't argue that same, that they won't accept the same argument. And oftentimes with companies like Brookfield, they're hiring people to just do broad abatement requests. CD Park 7, which is the owner of the Ave, we went through this process 2 years ago. We made an adjustment. When Vision put a number on all 3 of the major residential complexes, I actually went back to Vision and asked them to look at the numbers again and assure me that they had valued them the same way. So Vision told me then, we're going back to Vision now. We're expecting Vision to support us through this process at no additional charges, because they said they would when we started. We'll see. Both of these are properties that they go through. So the local assessor has 60 days to render a decision. At that point, if they don't like it, they can appeal. They have 60 days to appeal to the local Board of Assessment Review. If they don't like that decision, they have 60 days to appeal to the state board. So if you're valued at more than $1 million in your commercial property, you can appeal to the state board. And that is a multi-year process a multi-year process.
Can they go directly to the state board after the local assessor has rendered an opinion? Or do they have to
No,
go through the
no.
appeals board?
They have to go through our local Board of Assessment Review.
Okay,
And then when they get to the appeals, to the state board, Tom, they have instituted a whole mediation process now. So before you actually get to the board, you have to go through mediation and try to resolve the problem before it even gets to the state board.
So do they pay first? Or do they not pay an appeal?
no,
They get their,
Oh,
they get their,
pay, they pay.
they pay first and then they want their money back.
So as I know more, I will send you information. If it's confidential, if it's around a bargaining position for us, I will send it from our attorney so that you know as much as I do. The second item, I have three. The second item, I haven't had to do this in the 10 years I have been here, almost 11 years. Wow. We had a bid opening for a sewer project with some public works drainage attached to it on Westwood Drive. The good news is the bids came in a nice number, lower than what, about where we had hoped. We had a low bid, and unfortunately, the company that was low bid is a company that, since I have been in Orono, I have fined for environmental violations and code violations. Our experience working with them has not been good. I reached out to a neighboring community who has a more recent experience with this company to see if maybe we had an anomaly and things were different. And the information that I received would causes me to significantly question their ability to do this work. And in terms of, will they have the manpower? Will they have the equipment? Do they have the capacity to complete the job? Given that this is in a neighborhood where dust control is going to be important, there are environmental factors along Westwood. I am inclined to recommend to the town council that it go with the second highest bidder, which is an additional $20,000. And I will tell you, one of the people that I was talking with has been in this business for a very long time and is incredibly conservative when it comes to spending his organization's money. When he found out that there was a $20,000 variance, said, I would spend the extra $20,000 to go with the next bid. And so I believe in a bid process. I believe in an open process, but I also think we need to make sure that we're going to have somebody that's going to do the work, not bid one thing and then fight about change orders to add to the cost, and who we know is going to have all the equipment that they are going to need to finish the job. So I say this to you here because sometimes not a lot of people watch these committee meetings. I don't want to dismantle somebody's reputation, but my gut would be to recommend the second highest bidder. And wanted to have that conversation before I did it. Oh, Tom, you're muted.
You meant the second lowest bidder.
Second lowest.
From a legal,
Muted.
Unmute Tom.
yeah, there. From a legal perspective, we are under no obligation to accept the lowest bid.
No, we always put in there that we can accept or reject any and all bids. And with this one, it's not that we don't like them, it's that there is a clear history here and we did reference check. So we should be in really good stead.
Good.
And we're using local dollars for this project, so we are not required to follow federal bidding process, which would make it more difficult.
I'm fine with it.
What do you-
I see heads nodding.
Yeah,
As long as you're fine with it, I will just put the second bidder in, so you'll see Maine Earth, understanding that it's about $20,000 more than what low bid was.
Okay.
My last issue is LD 295, which is an act that creates a surcharge for material that goes into landfill. The issue that I have is normally if we saw something that was going to add $15,000 to the WPCF budget, which it would, we would, so it is part of this legislation would add $10 a ton for all of the sludge that Chris sends up to Juniper Ridge. And we budget 1,500 ton a year. So that would increase that budget by $15,000. Normally, when I see that, I would run right over to my computer and type out don't do this, you're gonna bankrupt my sewer plant. What is tough for me on this one is the intent of, well, there's probably lots of intents, but the idea of putting a surcharge on material that goes into a landfill is not a bad idea. That making a monetary impact for people to find other ways to get rid of their material is not a bad idea. And it puts me in this quandary of it's going to increase our WPCF budget by as much as $10 a ton. But on the other hand, it is a financial incentive to reduce waste in other ways. Chris reduces, has an incredible effort to reduce waste. It's not going to change the tonnage that we put out because our goal is always to put out the least. However, the bill itself might cause people to think of ways to reduce their landfilling of commercial demolition debris. It might cause people to think about the hierarchy and reduce and reuse and recycle before they landfill. So I have the split brain happening and I need council to weigh in and tell me, are we silent? Do I support it? Or do I
neither for nor against.
neither for nor against? Or do I oppose it? Or again, am I just silent?
Can I weigh in on this? Because I have been following this.
Sure.
And I followed this all day today. My thinking is that in conjunction with, I understand the incentive, the monetary incentive, to raise the cost, to raise the tipping fee charges, right? And that at the other end of that, the municipalities will be, there'll be some money for the municipalities in the end, kind of like the producer stewardship bill that passed. But it has to be in conjunction with some kind of a zero waste program. There's got to be some education that goes along with it. And that's my fear. My fear is that this bill is going to raise the cost, but it's not going to offer a balance on the other end. And so municipalities, there are some municipalities that do really well, lots of small municipalities, but there's some municipalities that are not going to be able to just simply pay extra money because they're just too small. And then, you know, and the amount of money that it's going to be, that you're going to get back is not going to significantly balance the amount of money that's going out. So neither for nor against, I can see both sides of this. I can see both sides of this issue. But I think that there should be an amendment to that, and there should be some program or something that goes along with it to help municipalities understand what they're throwing away and how much they're consuming, and some kind of a zero waste, I want to say program, but I haven't given it a whole lot of thought, to go along with it. It would make much more sense to me than to just increase fees again.
So
That's my take.
Is it important, given what you've heard thus far, is it important that the town of Orono weigh in?
I don't think so.
Are you guys comfortable with that?
So what's going to be
Yep.
the impact on a residential person who has, you know, who goes to the landfill a couple times a year? They're going to be,
So to our landfill, I don't know that we have to pay the surcharge. It is to the big. And
yeah. So, excuse, like, I'm sorry, I'm not knowledgeable. So would that be a potential increase to sewer fees?
Mhm.
Still, I don't know whether it's we weigh in or not, but I agree with you that giving more incentive for people to conserve is always better.
I don't think it's going to hit our residents' pocketbook, though. I think it's going to hit our municipal budget.
it will
From
hit
what I can
the
see.
municipal budget, which in, I think that when you have commercial folks or people who have large jobs and they would be going directly with CDD, because those folks are not going to come to the landfill that we have.
Mhm.
If you're doing a big municipal job, that might cause somebody to think a little bit differently about how they're gonna, I don't know. So if it were easy, I would have made a decision and told you.
I mean, we can always weigh in with a neither for nor against and weigh in, especially with the MRC coming on board and some things that are happening in that department.
Mhm.
I know that Mike Carroll testified
And then
this morning on that one.
was he kind of born against?
He was against. Mhm. Because I think what I heard from him was putting together a more robust recycling program that we need.
Yep.
So, so I see that in the future. I see that coming down the pike. I don't know, Sophie, I watched it today, so. I watched it today.
So what I heard was maybe there's enough other people in
There's a lot,
this,
yeah.
that we don't have to worry about it, and we don't have a unique perspective.
I don't think so,
Okay, all right.
unless it's gonna break the bank.
I'm seeing chins go up and down.
Yep.
Okay. My last item is that we had talked late last year about the audiovisual upgrade or turning council chamber into a Zoom room.
Mhm.
Bell worked feverishly to get an RFP out. It took us some time because it's the first one that we did that had to qualify under the ARPA. So we went back and forth a little bit, but She received and is making a recommendation for a firm that is experienced in this, that has looked at council chamber. I had told you I thought it would be, at first we thought about 75, and then I told you with pricing, it's going up, so 90 to 100,000 to affect this. It came in at $88,000, and doing that would make it, Belle's gonna interrupt me if she needs to, but you guys could be back at the dais for council meetings. We would have high def, so you have to watch facial expressions because you don't just turn into the masked wonder, or just the blob. But we would get the upgrades on the, for people who are hearing impaired that come to meetings, and microphones, and she, I mean, she did a phenomenal job, she really did. But we'd like to put this on the council agenda for Monday, ARPA funds to upgrade council chamber. We had talked about it, but I wanted to just mention it here before it showed up on a council agenda.
Right.
Yep.
Good.
All right. And I'm gonna make her explain exactly what it's gonna do in more techie terms.
Monday night.
Monday night.
Good.
So that's it. We have an election tomorrow right here in council chambers. Polls are open from 7 a.m. to 8 p.m. We have a cadre of people just waiting to help people vote. If we have candidates, it's important for people to understand that we can't have any campaign material within 250 feet of the town hall. Candidates were all, I sent them all emails so that they were aware of that, so we shouldn't have any issues, and we're gonna have a wonderful clean election and have hopefully some new people seated and ready for an orderly transition.
And hopefully an old person staying.
Where is he? Oh, yeah.
You know what I meant.
Old as in experienced.
That's right.
Not as in old.
Just to remind folks that in April, the 11th and the 25th, we have council workshops that are very important for people to be in person here for.
That said, are we ready to adjourn?
Yes.
Yeah. Okay. Raise your hand.
Bye.
Thank you, Tom, for your service.
Thank you.
So, Jeff,